Weakness in the dollar and economic data coming out of the U.S. was prompting a second look at gold. Business people, if you are thinking of getting back into gold or adding more to any gold investment, it's important to take a closer look at what is going on right now and in the near future. You are watching Economic Buzz, one talk show that brings you all business matters and policy, the economic issues, and analyze the Indonesian market to help you to make the right step for your capital investment. For you international business people in Singapore and Indonesia, I'm Iqbal Sutami Harja. Let's talk about your business on eBuzz. Towards the end of 2012, the gold price had increased on an annual basis in each year for a decade. What is the forecast for the gold price 2013 and beyond? Will the 10-year upwards trend of the gold price continue in 2013? What about the other major commodities such as oil as well? Here is the report for you.
A majority of gold investors views gold more as an insurance or store of value than as a means of speculation. These investors therefore regularly take a longer-term view on gold as an investment. What trend of the gold price can we expect in 2013 and for the following years? Gold price forecasts will never be completely accurate, but at least there are several information that we can collect on the key drivers influencing the gold price and analyst gold price forecast for 2013. The gold price is as the price of any commodity driven by the basic laws of supply and demand. The demand for gold falls into four sectors: the official sector like central banks, jewelry, technology such as industrial sectors, and private investment. The second important driver of the gold price, in addition to the demand factors, is the supply side. The supply of gold is composed of mine supply such as gold production and gold recycling. Safety is still always be a major concern for gold investors, who usually view physical gold or vaulted gold as more safe than so-called paper gold. On the other major commodity sector, oil, considering this year's rather volatile performance, one thing can be agreed upon by almost all investors is that commodity investing is essentially a crapshoot. This year's unprecedented summer drought and escalated geopolitical tensions in the Middle East have direct impact on commodity markets, leaving some lucky investors with profitable returns and others with steep losses. Overall, however, commodities have been experiencing a steady uptrend for quite some time, as global demand has continuously inched higher despite the recent economic slowdown. What can be reviewed from this promising commodities performance during 2012 and what will be the outlook for year to come? MNC Business Report for Economic Buzz.
Yeah, to have a deeper view about business review and the outlook for gold and oil commodity, we have Mr. Vicky Amarnani, market strategist, Monex Invest in the Futures. Welcome to the studio on eBuzz.
Thank you.
Mr.
Good evening.
Thank you for coming again, talking about this business review and the outlook for gold and oil commodity.
Thank you.
So, talking first about the global slowdown and the global economy slowing down during 2012, affecting to the commodity that such as gold and oil from Indonesia and also the demand. How is it, Mr. Vicky?
Of course, yes, there has been a global slowdown. Even from IMF, the World Bank, they have cut forecasts for global growth. Although in 2013, they still expected of global growth of 3.3%. But of course, if you see Indonesia in particular, Indonesia's growth has been fantastic compared to neighboring countries, posting a growth of 6.6%. And of course, no country is insulated from the global crisis if there is one or if there is a slowdown in the economy. But the three main countries that we need to focus upon is the United States, China, and Europe. And maybe for Indonesia in particular would be China.
Maybe China.
Because
Why?
from the exports, China takes the biggest share. Like if you see, for example, Indonesian exports to Europe are down by 28%, to the United States are down by 11%, and despite that, Indonesian exports are down by about 9%, much lower, because the impact from China has not been as severe, or from other ASEAN countries.
Because also the China is the biggest consumers of Indonesian commodity, right?
Exactly, exactly. And I mean, China has been slowing down from double-digit GDP growth to like now the 7-8% area. But there's a lot of expectation that with monetary easing, the China economy will continue to improve in 2013. And I guess the other point, for especially from the gold perspective, is investments. Central banks, the whole world wants to buy gold now. Retailers like us, investors, hedge funds, institutions. So that's brought a lot of support for gold prices in particular. Maybe for oil, there's been a lot of movement in oil price because of the volatility and the news that's happening in the market, and I see oil more of a range-bound thing. I mean, for oil to drop too low would not be healthy for OPEC countries, because they manage their budgets with oil, with the price, the revenue generated from oil. But at the same time, if oil goes above $100 for too long, especially for Indonesia where oil is subsidized, that's going to be a problem. But there will be a stage of stagflation where there will be very minimal growth and higher inflation.
So your prediction, if international global oil price is also increasing, so do in Indonesia, right? So what about this? I mean, the synergy and the correlations between the international global oil price and then to Indonesia. And with the
well, for Indonesia in particular, I'm not too worried, because the extreme case I've taken is that if oil goes above $100 back to the highs near $110, and there's a complete slowdown from China, I expect the GDP growth to go as worse as 4.4% in 2013. But if you ask my forecast for 2013, I would say in the 5 to 5.5% region.
5 to 5.5%.
But the extreme case would be at the 4%.
So you mentioned about China is the biggest impact. So how is the US and the Europe? Is that not really give much effect?
Well, China and US and Europe together is about 20% effect. And the other positive thing about Indonesia is that the GDP, from the GDP, 60% is domestic consumption. So very strong domestic consumption in Indonesia supports the economy very well compared to maybe other neighboring countries such as Malaysia, Thailand, where they depend so heavily on exports.
Okay, very interesting. We will be continuing after the break, Mr.
Thank
Vicky.
you.
Make sure you are still with us on Economic Buzz. We are discussing about business review and the outlook for gold and oil commodity.